Oh boy, here we go again. Monday evening, welcome back. Hope you guys had a fantastic weekend. We're getting ready for Tuesday's trading session. I got a bunch of great trades on my radar for tomorrow. I'm going to cover all my favorite trades in tonight's video. That way you have a roadmap to make some money. As always, make sure you don't miss tomorrow night's video. Make sure you subscribe. And if you enjoyed the video, hit that like button for me. Enough of the intro. Let's get to these charts here tonight. Everything's setting up nicely here for Tuesday's trading session. We've got, of course, the S&P is bearish. Nasdaq is bearish. Got some ranges going on right now on the Emini and the Nasdaq. And you know, ranges are always a very, very big clue. We're buying low, selling high, trading breakouts, trading failed breakouts. So plenty of trades setting up here for the S&P and the Nasdaq for us here tomorrow. Look at that big move on oil. They, of course, are right about to end lockdowns in China right now. Kind of a big drag, this oil market higher. Obviously, very bullish right now on oil. Anytime we see a big move in one direction, there are always three different scenarios I always look for the following day. I'm going to make sure we know exactly how to make some money off of those three different scenarios. We'll get one of them most likely, maybe two of them tomorrow. If we're lucky, we'll get all three of them. We're going to cover those, of course, here in this video here tonight. So bearish and ranges into the S&P and the Nasdaq, bullish on the crude oil. Again, three different scenarios on the oil. Before we jump in and go over all my favorite trades for each one of these markets, though, let's make sure, though, we know the news for tomorrow. There is two major news events for tomorrow. We've got that retail sales number at 8:30 Eastern Time, and then we got Jerome Powell later on tomorrow afternoon. These will likely be the biggest potential market-moving events here for tomorrow. The retail sales is definitely on our radar because if you recall, last month we saw a very strong retail sales number, even in the face of record high, 40-year high inflation. We'll see if inflation is really denting those retail sales numbers. It didn't 30 days ago, so we'll see what happens there tomorrow. I would imagine traders will be watching that for tomorrow. And then everybody wants to see how Jerome Powell tries to squirm his way out of the situation the Fed has put us in. They know that we know that they know what's going on right now. So it's kind of funny. We've got him. This is not a testimony tomorrow, but we definitely have Jerome Powell in front of the microphone tomorrow. I believe it's a Wall Street Journal interview. Things must not be very comfortable at the Fed right now if they do interviews in the middle of the afternoon. But all kidding aside, though, you have to think that it's going to be a potential market-moving event tomorrow afternoon. So get there early for those retail sales numbers. Come back after lunch, and that Jerome Powell speech, the kind of reaction to that speech will definitely be two areas you're not going to want to miss tomorrow. And don't forget, we open up our trade room every morning at 8 o'clock Eastern Time. I'll put all of the membership links you guys need in the description of the YouTube video. So be aware of that. Tomorrow night, we'll talk more about Wednesday and Thursday's game plan because we do have quite a bit to talk about later on here in the week. Back to our charts, though, here right now. We're bearish and range bound on the S&P and the Nasdaq. Oil, of course, bullish with a big move higher. Now, let's cut to the chase. Whether you trade one of these markets or you trade all of these markets like we do in our trade room, I'm going to cover all my favorite trades in each of these charts here tonight. You're going to learn something new throughout the entire lesson here tonight. And you know me, I try to wrap together things and really save the best stuff all the way to the end of this video. So I'll give you a reason to stick around and watch all the way to the end. Let's jump in first to the S&P 500. We'll go S&P, Nasdaq, and crude oil. Again, whether you trade one of them or you trade all of them, there'll be money-making ways to learn from this here throughout the video here tonight. What's the most important thing happening right now on the Emini S&P? The most important factor right now is we have a range right in the middle of this chart, and we have basically the bears in control and rotating down off of that high. That's the most important factor right now on the S&P 500. It's also a very similar aspect here on the NASDAQ as well. So knowing this, right, we know that ranges are balanced areas. Ranges act like magnets. The amount we go above the range is oftentimes the amount we go below the range. We have a pretty good idea of where these bears want to get to, right? They want to take out those lows, the low of day for one, and of course that pendulum swing down around that 39.75 39.75 to 39.70 area. So again, range market, we pop up. You can see they conveniently took out that overnight high up there. It's almost like, what do we always say? Mission accomplished, right? Mission accomplished. And then now they can let this thing roll as we go lower here. So bears definitely have a little bit of the, well, not a little bit, but a lot of the edge on this right now. And there are a lot of different ways in which we can sell this. You know, for example, we get some channels coming down overhead. We can definitely look for some shorts popping up around the high of that channel. Absolutely selling off the high of that move. I also like some shorts as we go lower. We'll talk about that detail here, obviously, a little more detail here in a moment. And I think also to the bears, if we were to get a big move lower, that's a lot of momentum. And anytime we see a lot of momentum like this, we know there's a good chance they'll get that pop up and that retest of that low. So I really like, again, as we're going lower, there's a lot of great trades here for the sellers to kind of short those pops as we try to take out those lows here. How do the buyers want to do this? The buyers now, obviously, there'll be ways to buy this market tomorrow, but they've got the most difficult job as far as I'm concerned, because as we go, well, for example, as we go higher, you want me to buy into those? No, definitely not. I can't buy into those highs. So buyers have to hold some sort of breakout up here. But look where we are, though, right? I'm not sure if you guys recall this from last week, but we have a ton of resistance up overhead. So buyers really have to kind of, they've got to, they got to do something really pretty impressive tomorrow to push those highs. It's not impossible, but right now it doesn't look very likely. It looks like those buyers have met their match, because every time we go up, the bears are coming in and defending it. I would also say too, the buyers can definitely buy off of this low. I think a double bottom reversal on this will be a very, very good plan of attack for the buyers. We saw that earlier today where we had that big move down. The bears, of course, sold into that pop. They retest that low, and that's when you start getting some more reliable long trades coming off of that low here. So again, there's no shortage of trades here on the S&P. Let's talk about the up, the down, the sideways. We'll cover my favorite trades, and again, a lot of these will overlap for the Nasdaq. So I'll do a couple of them here. I'll do a few of them in the Nasdaq, and we'll go forward from there. What you want to think about right now is that really the deeper the pullback that we get right now, the better. In all reality, what I'd like to do is look for one of these three types of pullbacks as we come off of this low here. Again, keep your eyes on kind of a channel like that. There are three basic pullbacks you're looking for in this sense. One is we call a trap. Now, traps are fantastic whenever we're concerned with selling really low. Now, why would this be concerned selling low? Well, you'll notice the trend line coming up. The range is right there. So really what I want to try to sell as high as I can. You know, you want to sell high. So if all we get is a shallow pullback, little trap set up would be great. But let's say, for example, though, we go a little bit higher here and we get up around the high of that channel, right? Up around the high of that channel. We pop up. Now, hopefully the buyers are foolish enough to try to buy that pullback. You know, again, there's a lot of resistance up here. So hopefully those buyers will come in. They'll try to buy that pullback. You know, we see a lot of those in range markets, and then think about where their stops are, and we can use their stops for basically for fuel and move back into that range again, right? Target will be back to that trend line, and you definitely want to leave a runner in that situation and go back down, right, to kind of retest those lows. Makes sense, right? So if I can get this pullback off of this low, get those buyers to foolishly try to buy into that pullback. Now their stops are right there, and I can literally sell right into those stop losses for a failure pattern, right? And use that range as a magnet. Again, we know the market wants to rotate back down again. Now, my favorite trade for tomorrow for the short side would be if they go right back to retest the high, or if they get close to that high. Now, this does not seem likely, but this is probably the best sell setup if we do go higher without going lower. In other words, if we go back up and retest this high right now, fantastic place to get short, because you're at major areas of resistance with a range acting as a magnet down below us. But what's the problem? The problem here is momentum, right? The problem is momentum. So in that case now we use a slight variation of the failure trade. We use what's called a two-try failure, right? Pretty simple idea here. Now, instead of the buyers simply trying once, we let them try a couple times because, again, it's a very strong momentum move at that point. And for all I know, something may have changed in this market, and they may be trying to run this thing up to that 40-65 area, which is kind of the top of that resistance range there. Anyways, long story short, one try, two try here for the buyers. At that point now, remember, think about it. We're at resistance above the range. Where's the buyer's stop losses here? It's right below that low. So that's where your entry goes. Now, the reason why I love this, the reason why this is my favorite short for tomorrow, at least if we go higher here, is that now once we run those stops with that failure setup, now as the market rolls lower, now I've got just enough space now to find a follow-up trade. This is where the fun happens right here. We grab our failure off the high, right? One try, two try, and then as it rolls over, we trade the turn. We find that new channel. I always like to look at those little prior swings and try to grab what I call a trap setup, which is just above a prior swing, and it's right up around the high of that channel. Does that make sense? Right? So the buyers come in, they pop up, they run into that high. Buyers are obviously trying to get something going at that point. So let them dig their own grave. Let them try once, let them try twice, hit them right into those stops. And then as it rolls over, your job is not done yet. Find that new channel. And then again, I said I like traps on these. I love the trap setups, but this could also be a failure setup, a pullback setup off the high of that channel. Now, I know a lot of you guys and gals, you guys watch every evening. You've taken the free trading course on the website. You've learned the strategy. You know the setups. You know what they look like. You know the rules. So you know when to take them and when to skip them. But I'll tell you, there's a lot of folks here that are new for the first time tonight. If you're watching for the first time, if you're one of the few folks who haven't taken that free class on our website and learned these setups, I'll put a little link up here for you in the upper right-hand corner. You got to grab that little link. Take the free trading course, learn the strategy, learn the setups, learn all the rules so you know what I'm talking about when I say two-try failure into first test is the best test. If you're like me and you hate missing the best trades each day or you're taking too many losses, the roadmap you're going to learn in that free trading course will get you back on track, get you start making some money on your own account. And that way, the next time I say, shallow pullback, trap, you'll know what I'm talking about, or two-try failure, you'll be ready to go on that. Now, real quickly, how do we buy it as it goes higher? Again, that's the problem here right now. There's a lot of resistance as we go higher here, right? It's not just overhead levels, it's those prior levels too. I mean, I'm being quite simple in the way I'm drawing it here right now. There's a lot of resistance up overhead, but as you can see, look at that wide open space up there. So buyers definitely have some incentive to get this thing going, but what you've got to really remember right now is we have to get up into those highs and they have to hold that pullback. So if you think about it this way, if we go up into these highs here, look what's happened here. Buyers couldn't hold it. They obviously couldn't hold any of these here today. So I definitely can't try to buy that pullback if we go back and retest the high. However, though, if they can go back up and retest that high, if they can hold that pullback, and if they can show me some proof with a jump off that moving average, I like that trade. I'll go out, mark up that high, find a hidden channel off that low. Again, I like to find what we call traps, right, below prior swings. But really what I really want is I want to get us down to the low of that channel. Grab a trap, grab a failure, grab a pullback setup, and then where do you think the target would be on these trades? Where's the target on these pullback entries? And again, I say pullbacks, right? They're traps, they're failures. You'll learn those setups in that free video course. Where's the target? Definitely to retest the high, absolutely. And then remember, the first leg, right, is oftentimes equal to the third leg. Trending markets love to go one leg, two leg, and three leg, where that first leg and third leg are very often completely symmetrical or very similar to each other. So keep that in mind for your final targets. And what do you think? Is it possible that we might get a 1, 2, 3 breakout? We might get that retest of the high, right? We're buying off that low. They retest the high. And then what do you think? Is it possible here that might lead into a 1 try, 2 try for the bulls? Where are their stops? Exactly right. And a short back down again. Find that new channel off that low, and then you better be grabbing that first test off the high of that channel. I like that a lot. Again, we may not get a huge home run off that pullback for the buyers, but if we can get that 1, 2, 3 reversal going higher, there's a very good chance they'll at least go back and retest that high, and then we can start gearing things up for that short, going back down where? Back into that trading range, back down to that big round number at 4,000 even. Now, as we're going lower here, you can remember where do the bears want to get to? They want to get going right down to that pendulum swing here. So pendulum swing is where this market wants to go right now. There's a lot of ways in which we can sell it on the pullback. Like I mentioned before, I think there's ways we can sell it short term, ways we can sell it long term, and a couple of breakouts we can use here as well. Why don't we go grab the NASDAQ? Because the NASDAQ is very, very similar to this here, so I'm not repeating myself here over and over again. But the same thing we talk about the NASDAQ here will also apply here to the S&P 500 as well. Over on the NQ, now boy, the NQ is a lot more bearish, can you tell, than the S&P. First of all, you can see why, right? We never took out that high on the NASDAQ today. There also appears to be this very clear bearish tone to it, where there definitely wasn't that tone to the S&P. Right? S&P was more like double bottoms, higher low. S&P doesn't look nearly as bearish as the NASDAQ. They both have, again, the same kind of core principles here right now. It's a bear market down into a trading range. This one is a lot more pronounced, as you can see, right? We pop up, and now the amount we go above that range is the amount we go below that range, and we're trying to get this thing to rotate going lower. Make sense? Same basic idea as the S&P 500. Ranges act like magnets. Okay, now, at this point now, we know what the bears want to do, right? The bears want to get up. They want to sell as the market pulls back, right? They want to sell as the market pulls back. The bears, I think, have a great opportunity here right now as we go lower, okay, to sell as we're, again, sell that kind of pop and pullback we talked about earlier there. So I really like that a lot as well. I think there's ways for the buyers to buy it off of that double bottom too. Nothing wrong with that either. We obviously have to be careful on that, but I think there's going to be ways the buyers can buy this thing as we go here. It does look like the buyers probably have a little bit more potential to take control of this because there's a lot more space overhead. You know, you could easily say there's kind of unfinished business up around those highs for tomorrow, right? Unlike the S&P, where the S&P doesn't have that problem. Right, so there definitely is some good and some bad for both sides of this NASDAQ. Now we've already kind of talked about this already on the S&P, but I'll go over it briefly here on the NASDAQ. If we were to have a really shallow pullback right now, what would you do? Trap. Yeah, so trap pattern would definitely be your best option for a shallow pullback, especially in this example because look at the ranges. Right, you're right there. So shallow pullback. Trap. And it's pretty easy. Shallow pullback trap. If I get a modest pullback, I may not go all the way to retest that high, but I start running into some trend lines coming down overhead. A modest pullback. Trapping those buyers. Let those buyers come out. Let them try to buy that pullback off the moving average. Once they get stopped out, we're selling right into those stops for a retest of that low. Right? Target off the low, leave that runner. Absolutely take out that pendulum swing. I like that failure setup off of that high. And again, if I had it my way tomorrow, we'd go back up, retest that high, And the reason why I like this one the best is there's so much reward for the risk involved. It's the best risk reward trade. But remember though, anytime you have a really good risk reward, you pay a price for it. Okay, there's always kind of this balance between risk reward and momentum. So yeah, you can risk small to sell, you can risk small to earn large by selling that big top up there. But what's the trade-off to it? The trade-off to it is momentum, right? It's a lot more bullish at that point. So the odds aren't going to be as good. That's kind of how it works, right? The better your odds are, usually the lower the risk or the worse the risk reward ratio is, right? If your odds are an 85, 90% chance of a winner, chances are there isn't a lot of profit left on that move. Don't take my word for it. You'll see yourself when you get trading tomorrow as well. So again, I'd really like to get up into these highs here and then start really roping in some of these buyers. Get these buyers trying once, get them trying twice, and now we have all that open space down below us. The range is still the magnet. We're at resistance above the top of a range. It's the perfect spot to be selling short. Think about where the pain is, right? Think about where their stops are. Think about when you didn't know any better. I know you know better now, but go back a few months ago before you found these videos and before you joined as a student of mine. Think about what you didn't know then, right? Where are those stops going to be? And literally just sell right into those stop losses. And then remember, your job is not over yet. One of my favorite follow-up trades on this is to find a new channel low, obviously mark that high, and then look left. Find those little prior swings, and you want, as we always say, you want that first test is the best test. We can play around with that in our trading room, right? But first test is the best test. And again, I like traps. Traps are great. A failure pattern is great. A failure into pullback combination is great. Again, I know a lot of you guys already know those patterns because you've taken the free course and you've learned the setups. But don't forget, I have hundreds of examples of how we apply our favorite setups like failures and traps, all included in that free course that I mentioned, linked up in the upper right-hand corner. So definitely grab that. Now, as we go higher, remember, again, if we go higher here and the buyers can hold that pullback and jump off of that high, I really like that. Buy that first pullback, retest that high, and then 1, 2, dump it back down again, and same sequence we always talk about, right, coming off of those highs. I really like that short as well. I like both of them. I really do. So, sell side now, going lower, okay? Going lower here. One thing you can definitely see potential for right now, and again, all of this will also apply to the S&P 500, but if we were to start grinding down here, right? The old pop and grind. Yeah, the old pop and grind. The pop and grind is a great, great clue because now what you can do is you can draw a trend line right off those lows, bring it right up around that big high. Okay? See how I do that? It's like a little hidden channel. And then start looking left and start thinking about where those prior swings are. The goal of this is very simple. The goal is I want to get up around the high of that channel, above one of those prior swings, and this is where traps come in. This is where buyers can come in and try to buy that pullback. Now, I realize it is a range, and so the buyers might be successful with that. But remember, though, in this situation, it's a lot of momentum for the bears. And so anytime we see a strong move in one direction, it's very likely we at least get back down to retest that low. So I like the idea of that first test off the high of that channel with whichever of the entry setups that we're going to get. And then at that point now, I think it's time to look for the long side from there. Well, think of it this way. Either we go long with a 1, 2 failure back up again, same basic idea, or it's a breakout, or it holds this pullback and it really breaks through. And remember, this is the pendulum swing down here. So if we break and hold below that pendulum swing, what does that tell you now? That's a breakout, right? That is a breakout. So again, we get that short off the high. Do we then come over? Remember, always take some profit of the low, and then think about this now. Bears once, bears twice. Again, stops are right there. At this point now, it's safe to be a buyer because you have all of that momentum. The bears got short, right? They made their money. They took their profit. We're not going any lower, so the range is still intact, And now if I can get the bears to come in, remember, these are the weak hands down here. Okay, these are not the pros. These are not the pros selling down here. The pros are selling up here, right? They're selling as high as they can sell. Okay, these are the weak hands down here. Okay, what'll happen is when you get those moves lower and they retest, you'll get that 1, that 2, and pop right back up again. That's the same exact thing we're looking for here as well. Let them try it once, let them try twice, and we can buy that pop going back higher. Now, because we have that bearishness to this market right now, I like the up 1, 2, and then grab that channel. Just so you know, I like that channel short a whole lot better when I'm going with this momentum. Make sense? As opposed to, let's say we do go down, double bottom here, and then we get this one right here, right? There's your 1, there's your 2. This channel here, right here, is definitely not as desirable as you can imagine, because now you've got trend lines coming down overhead. There's a lot more to, there's not as much to like about that follow-up trade on that one. Does that make sense? Is that kind of ringing a bell? Is that a light bulb moment there? If you're learning something, by the way, I hope you'll hit that like button, and hope by now you subscribe to our YouTube channel. I publish all the good stuff right on this video every evening, so don't miss tomorrow night's video. Make sure you subscribe, hit the bell icon, that way you don't miss tomorrow night's upload as well. So that's a great idea as we go lower. And honestly, this is the same idea. Let's say we keep on going. You know, we keep on bleeding down. The more this thing kind of bleeds lower here, the better it is. Right? The stronger that momentum is. Now, I've got this channel drawn up like this, but you know, this could easily end up being something like this, where it kind of grinds all the way down here, you know, ends up down around these areas. And again, we're kind of coming in tomorrow and we're just waiting for that pop up, trying to get up above that, off that low, get those buyers roped in with a failure, a trap set up, and then back down to retest that low, and then the 1, 2, and the 30. So again, it may keep going lower here. And remember, this is also literally almost to the tick, the exact same thing here for the S&P 500. Now, as we go lower here, if we go lower here, how do we sell it down here for a breakout? Well, remember, there are a lot of different breakout patterns we can use. The one here I would look at first is that pop and grind, or we take out that low, we pull back, and again, it blasts through. It doesn't double bottom and then struggle and go back up, right? It blows right through that low. These are those 1, 2, 3 breakout patterns that are really, really important, because if they can't hold that pullback and break out, it's going to end up right back up into that trading range. And remember, we do have a lot of support here. There is a lot of support, as you can see here, just around that, what's that, 12, 102. But if they can crack and get through that area, oh boy, now you've got the 12,000 big round number, very big psychological level. And then look at this area down here, 11,800, little range down there. It looks lonely down there, doesn't it? We talked about this last week, how when the market kind of spit back up off that low, we thought, well, they might take out that range. And I'll tell you, this could easily turn over to the same thing here once again, break down, hold, and we might find ourselves hunting for those lows here later on here this week. Obviously, we got to wait and see what we get here on this, but that's definitely something that we have on our radar here for tomorrow. So it could be a pop and grind. That definitely could be the case here going lower. We talked about that a few times already. It could easily be take out that low, hold that pullback, right? And then jump off of that moving average, find that low, find that high, find those prior swings, and then your job is simply to wait for that first pullback and then take whichever of those price action setups we teach in that video course. That's going to be your failure, your trap, or your pullback from there. That can also work as well. All right, guys. So again, lots of ways we can sell this thing as it's going lower. Do they break out going lower? We're grabbing that first pullback, right? Or do we trade the bounce and then back up into that trading range? Again, a lot of this is very interchangeable on the S&P as well. I think the most important thing right now is don't force the breakouts. Just because it looks very bearish right now, we may still keep rotating back and forth inside of this trading range. Last but not least, we'll wrap things up here on the crude oil. And what do you think, by the way? I tried to trim up the format of the video a little bit here. I definitely want to make this as short and potent as possible. If you enjoy the new format, let me know in the comment section below. If you like the original format where we take a little more time on this, let me know as well. I would love to hear your feedback in the comment section. How about some oil here right now? What's the most important thing on the oil? It's a big move. That's the most important factor here on the oil for tomorrow. It's a very big move in one direction. There's a lot you can unpack on this. First of all, anytime we see a real strong move in one direction, we know we're going to probably see a deep pullback and a retest of that high. At that point now, we either get short off that high, double top, or we try to break out, right? Going up through those highs. It's very simply put, right? So at this point, we're very, very bullish. We'd like to be a buyer on a pullback. Now, second piece of this puzzle is that's a really big move today. That's a really, really big move in one day. Anytime we have a big move in one day, we know the odds are pretty good for a range the following day. And it makes sense, doesn't it? You know, if the market runs a marathon today, tomorrow it might need to kick its feet up a little bit and relax a little bit. You know, kind of catch its breath, if that metaphor, makes any sense. So again, think about it. It's a very big move. So how would we attract buyers into this market? Because look, there really wasn't any real pullback here today. And again, if you're wondering what caused this here, I believe they're officially unlocked now in Shanghai. It has not been a very popular story. People haven't really heard much about it, which is interesting in itself. But the reality is there's been one of the world's largest cities have been under a pretty strict lockdown for, I want to say, a few weeks now. And so that was kind of rumored to be one of the big reasons why oil had pulled back off those recent highs over the last 3 to 5 weeks. Now it sounds like the cases are under control in Shanghai. Unlocking has now begun, or whatever you want to call it. And the perception of that increased demand, right? More people driving cars, more people traveling and flying, and that the perception of that demand now is what caused that spike. But now, if you want to buy this market, you're kind of too late, in a way of saying it, right? We have to attract more buyers in. That's why a big move today oftentimes means a deep pullback to attract more buyers. And we know that's definitely going to be something on our radar. We also know, too, that sometimes these big moves, they're for a good reason. And so sometimes nobody dares to sell, right? Because nobody wants to get out of this rocket ship to the moon, right? So we might see a lot of traders that might say, you know what? I'm not taking my profit right now. I don't care if we're at 115, right? I'm sitting in this thing. We're going back to all-time highs again, or, whatever close to all-time highs was, right? 120, 125, 128. At the same time, nobody wants to buy up here. It's too high. So that may also result in the market treading water. Okay, the bears say, right, the bears don't want to sell into it because it's way too bullish. The buyers don't want to buy more because it's too high, and they're not taking profit because it's potential to go back to those all-time highs again, or up in that 120 area. And that's what causes a market to basically roll sideways. So whenever I see a big move in one day, I always think, okay, we've got to get a really deep pullback to attract people in, and there might be a chance it might go into a range. So let's talk about these. Buyers, right? Buyers definitely have all the, right? They have all the cards right now, but there's plenty of ways the bears can get involved. For example, if we see a range here, right? If we see a range here, buyers will want to buy below the range with failures. So if we see a range here, we'll buy below the range, right? Buyers do that. If we get a pullback here, there are really two types of deep pullbacks. We'll talk about that here in a second. So two types of deep pullbacks we can use on this. Okay, those are another way the buyers can buy this. If we keep on grinding higher, right, buyers can look for those pop and grind channels, right? So that's where the buyers can buy this as well. Plenty of ways the buyers can buy this. The sellers, I think bears have a great shot here too. I love that double top reversal. I mean, come on, that would be great. Let the buyers buy the dip, let them take their profit at the high, and we can then short that sucker back down again. How do you not love that trade short? That's a great one. And then you know what? Every once in a while, we get one of those kind of easy come, easy go, whereas we get those big run up, and then we have this kind of pop and grind, and it kind of grinds back down again. I like that short as well. I like that one as well. So again, I'm not really in the prediction business. I'm in the let's see what we get and let's trade what the market gives us business. That's what we should be looking for here for tomorrow. It would also be wise to keep an eye on rollover for tomorrow too on the oil. Just be aware of this. We are looking at probably going to have rollover at some point either tomorrow or Wednesday. In all reality, it's tough to tell right now. You'll notice the 622 contract, which is the current front month on oil, has 258,000 contracts. Once the 722 contract, remember oil rolls over every 1 month, once that has basically the more volume, will trade the 722 contract. So tomorrow morning, be aware, you might come back to your desk tomorrow. We may open up our trade room tomorrow, 8 o'clock Eastern time, and we may see that rollovers already happen. So just be aware of that. At some point, next 24, 48 hours here, we're going to probably see rollover here on the oil. We almost hope it's tomorrow. Kind of get out of the way. Oil is one of those markets that kind of loves to take its time with rollover, which oftentimes produces some lower volume markets, which just aren't as easy to trade here. Anyways, be on the lookout for rollover. And of course, in the trade room tomorrow, I'll make sure everybody knows when rollover is on any market that we trade in our trade room. So let's talk about the pullback here right now. That's what we want the most, right? So on the pullback, whenever you're looking for a deep pullback, you want to think about two types of pullbacks. One is a two-legged pullback. Okay, so two-legged pullbacks. And this looks like it's going to give it to us right now, doesn't it? Draw that trend line down over the head, right? And then you want to try to get up and over and use that trend line. So one of the first things I think of when I think of a deep pullback is there may be two legs to that pullback, right? So one leg, two leg, and then we want to go up and then again try to grab the entry off of that trend line. At the very least, avoid trading right into that trend line. Make sense? Now, the next thing is that one of the most common entry patterns in a really deep pullback is that same two-try failure. So we get a deep pullback in. Remember, that deep pullback, we are still bullish, but the strength of that pullback becomes so strong, if you will, there's a good chance the bears sort of take it and go lower. So we respect them on that. We respect them. Let them try it once. Let them try twice. Think about where all their pain is, right? Where those bears are stopped out here and buy into those stop losses. Now, one of the most common follow-up trades after a deep pullback that traps in all those bears is once you hit those stops, it oftentimes really pops. And when it pops up like that, you got to be aware the high of that move is the objective. So what's the best pattern setup when you're worried about buying high? We talked about this earlier on the video. What we were talking about earlier on the S&P and the Nasdaq, where traps are the best when you're selling low or buying high. This is a very good example of where a trap setup would be ideal as we go back up to retest that high. If you can find that channel on here and use a channel, even better. Make sense? So really deep pullback. Again, find that, wait for that deep pullback. I've got my channel drawn right off those highs like that, down off those lows. I like that spot for the pullback. Again, though, it will be a little bit more bearish than we'd like it to be down there. So get that right deep pullback, rope in those bears, hit them right where it hurts, and then grab that trap entry. Why a trap? Because we're right knocking on the door up around that high. That's the way we want to trade that. And again, remember, there may be a trend line coming down here as well. So try to use that trend line to your advantage as well. Really like that long trade on a deep pullback. Now, what if we pop down and then all of a sudden the bears, they jump off that moving average? Then what do we do? Yeah, that's a reversal. Okay, that's a reversal. So if we go up and they jump off that moving average, remember, that's the key. They have to jump. Look how the buyers are jumping off moving average. The sellers have to jump off that moving average as well. Okay, if they can hold that pullback and jump, Then we go out, we find our new low, we find that hidden channel, we drill down to our faster time frame, and we find the entry off that high. Again, I love traps, I love failures. You'll learn the specifics of the entry setups in that free trading course. Where is the objective at that point? Where's the target? Oh, you got to be thinking big round number at 110, and then absolutely down to these lows here, right, for the runner going back in. But definitely that 110 level. Because remember, right now, oil is making $5 moves like they're nothing. And so we're going from 115 to 110, be a really good place to grab a target, leave a runner down to that 108 half area. There'll be obviously a little bit of false bottoms down there, right around that, maybe around that 108.75, stuff like that. That'll be a really, really good target there for us as we go lower. I think what is just as likely, though, is that kind of pop and grind. Easy come, easy go, right? If this thing kind of reverses, now all the buyers who got in, now they're getting out, and that causes this market to grind down. Now, nice and tight off that low, nice and tight off that high, and you get the picture, right? We go up, get that trap, get those buyers roped in above the moving average, failure, pullback combo. And remember, in these situations too, first leg, third leg, again, 110 becomes a really nice target, but you can really fine-tune those exits by using measured moves. And you'll learn more about measured moves, of course, in the video class that we offer here at School of Trade as well. Last but not least here, let's talk about the range. Oh, and remember too, don't forget, if we get that pullback here, right, that pullback, we retest the high, you better be thinking about that 1, 2, get those stops get hit, and then back down from there. I mean, come on, that is like the best possible short trade. Go back to retest the high, get those buyers roped in, let them try a couple times, sell right into those stops. And then don't forget, your job is just getting started. Find that new channel and grab that trap, that failure, that pullback as we sell off of that high. This is why I always tell people, you can trade both sides of these markets. You just got to make sure you know what you're doing, right? So buying low, selling high, not the opposite, right? We don't sell low and buy high. We buy low and we sell high. I like that setup as well. And also too, keep in mind too, if we keep on grinding, we've talked a lot about different breakout patterns tonight, but if we keep on grinding, not a lot changes. We're still looking for those channels, those kind of big pop and grind channels. We're still waiting for that deep pullback. We're still waiting to get those bears roped in and right back up again, right? Not a lot changes if this market does keep on grinding higher. Okay, how do we trade a range? What's the game plan for a trading range? So when it comes to finding a range, or when it comes to trading a range, what you want, now keep in mind, I have no idea where the range is right now. I've made kind of an educated guess here, but this is a very raw guess. I don't know where the range will be. But let's say, for example, there's a range here develops overnight. If we do start seeing double tops, double bottoms, start going sideways here overnight, what you want to remember is the size of that trading range, the size of that range will help us determine where our key levels of support and resistance are going to be. I cover this in more detail in that free trading course. The key is, though, we have to find that range first. Once we find that trading range, then we find levels of support below the range. We wait for, remember, it's a bull market at that point. So wait for the price to pull back. Eventually, these buyers will run out of bullets, most likely. At that point, let those bears come in and try to get short. If they try to get short off that moving average, now you got them. Now they're trapped. If the market keeps on going lower, what is that? That's a reversal, right? That's one of those 1, 2, 3 breakouts, 1, 2, 3 reversals. So if it does go lower, if they do hold that and jump, what do? Same thing. You mark up that low, mark up that high, and grab that first test back to 110. Nothing different there. But if the bears fail, now we look for that run going back up into that trading range. We're buying into those stop losses. Targets will be, of course, at the high of that range. And then what do you think? I can take the amount we go below the range. I can project that going higher now, and that becomes another objective. Now, at that high, can I sell off that high? I definitely can. But what's the problem? Momentum is my problem, right? What do? We go 1, we go 2, and we sell it back down again. Okay, that's the way you trade a bull market into a trading range. You find support levels below the range. Again, the size of the range will be a good kind of roadmap for you to find them. And obviously tomorrow, I'll do it with you tomorrow in the trade room, right? But you find support levels below the range. You trap in those bears with failures. You buy back up into the range because ranges are magnets. Take some profit off the high. Leave a runner back to that pendulum swing. Once we get to the pendulum swing, now we let those buyers basically rope themselves in, right? Let them wrap that noose around their neck. Once they try a couple times, twice is my favorite, then we know where their exits are and looking to drop it back down into that trading range. And if you're really good at this, you'll drop it, find that new channel, and then hit that first test, because the first test is always the best test. Love that setup. And remember, if it goes through and holds, it's a breakout, right? 1, 2, 3 breakout, pop and grind breakout. All right, hopefully by now you can get the point there about the game plan on this for the oil. I'm very interested to see what happens on oil tomorrow. Will we see a rollover? You know, hopefully it is. Hopefully tomorrow's rollover. If not, we'll keep on trading that 622 contract here for tomorrow as well. Now, speaking of tomorrow, this is the easy stuff tonight, right? Tonight we planned our trades. Tomorrow we trade our plan. We open up every morning, 8 o'clock Eastern time in our trade room. Guys, if you're looking for a place to come out and learn and trade along, our trade room is a fantastic place to be. I have all the cheat sheets, all the worksheets, all the software templates. All I need is you. If you hate missing the best trades each day, or you're taking too many losses, making too many mental mistakes, or maybe you just want a fun place to hang out and trade together every day, you'll love our trade room. I'll put all the membership links you guys needed. I'll put all that stuff in the description of this YouTube video. So grab that link, get registered. I'll put the free course links down there as well. So great place to begin is the free trading course to learn the strategy basics, get traded on your own, and I'll see you soon in our trade room as a new student. Don't forget, I'm always here to help. If you have any questions along the way, don't be afraid to call the office. I know I speak quickly on these videos, but in real life, though, I do like to slow things down quite a bit and make sure we answer all your questions. So don't be afraid to call the office if you have any further questions on that. Or just get registered on the website, and I'll see you tomorrow morning at the opening bell. Guys and gals, thank you so much for sticking around to the end. Thank you so much for watching all the way through. If you're watching still right now, you are the person I do these videos for, so thank you so much for tuning in. I'm looking forward to seeing you guys tomorrow morning in the trade room as a new student. But that's about it now, guys. That's it for me. Rest up. Get a good night's sleep. We'll see you guys tomorrow at the opening bell. If not, we'll come back tomorrow night, and we'll do it all again in tomorrow night's newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.